Look at this line. Most people see a statistic, but if you hold US dollars in your bank account, what you are actually looking at is a crime scene. They tell you inflation is under control. They tell you the economy is strong. But ask yourself, why are central banks around the world buying gold at the fastest pace in history? Why is China dumping US treasuries? They know something you don't. They are preparing for the exit. And while the world is distracted by AI stocks and crypto memes, a quiet storm is brewing in the most undervalued asset on Earth. Silver. Not $30 silver. Not $50 silver. We are looking at a mathematical setup for $100 or even $500 silver. Sounds impossible? Crazy. By the end of this video, I'm not just going to tell you why it's possible. I'm going to show you the data that proves it is inevitable. Welcome to the Silver Supercycle. To understand where we are going, we have to look at the blood on the tracks behind us. Silver is a strange beast. Unlike gold, which is the steady grandfather of money, silver is the volatile teenager. It does absolutely nothing for decades. It bores investors to tears, and then, in the blink of an eye, it rips faces off. Let's rewind to 1980. The Hunt brothers. Inflation was rampant. The dollar was losing trust. Silver sat at $6. Boring. Dead money. Suddenly, fear took over. In just a matter of months, silver didn't just double. It didn't just triple. It skyrocketed from $6 to nearly $50. That is a 700% move. Imagine putting $10,000 in and walking away with $80,000 in less time than it takes to build a house. But maybe that was a fluke. Fast forward to 2011, the aftermath of the great financial crisis. The Federal Reserve turned on the money printers. Quantitative easing entered our vocabulary. Silver was trading around $9 in 2008. People laughed at silver bugs. They said, "You can't eat silver." But as the dollars flooded the system, gravity took over. By April 2011, silver hit $49, another 400% explosion. Do you see the pattern? Silver is a coiled spring. It gets compressed and compressed and compressed by paper markets and sentiment until the pressure becomes physically impossible to contain. And right now, in 2025, that spring is tighter than it was in 1980. It is tighter than it was in 2011. Why? Because back then, we didn't have a green energy revolution draining physical supply. Back then, we didn't have a global debt crisis of this magnitude. The table is set. The slingshot is pulled back. But before we talk about $500, we need to address the elephant in the room. The one thing that skeptics always scream about. Where is all the silver going? The answer will terrify you. Because the vaults are running empty. For 5,000 years, silver was money. That was its job. But in the last 20 years, something fundamental changed. Something that the market is still refusing to price in. Silver stopped being just a precious metal and became a strategic metal. You see, gold is useless. I mean, it's beautiful. It sits in a vault. It looks pretty. It doesn't do anything. Silver is the opposite. It is the most conductive metal known to man. It is the most reflective. It is indispensable. You cannot have an iPhone without silver. You cannot have a Tesla without silver. And most importantly, you cannot save the planet without silver. Let's look at the numbers. They are terrifying. In 2014, the solar industry consumed about 48 million ounces of silver. Fast forward to 2023. That number nearly quadrupled to over 190 million ounces. And here is the kicker. The net zero goals set by governments require solar capacity to triple again by 2030. Do the math. The Silver Institute reported a structural deficit of nearly 200 million ounces in 2022 alone. That means we are burning through silver faster than we can dig it out of the ground. We are eating into the above-ground stockpiles that took decades to build. It's like draining your savings account to pay for groceries. It works for a while, until the account hits zero. And it's not just solar. The new generation of AI chips, silver, 5G towers, silver, Tomahawk missiles, over 15 kilos of silver in every single guidance system. When war breaks out, silver doesn't come back. It explodes. It's gone forever. We are facing an industrial vacuum that is sucking physical metal out of the vaults at a rate history has never seen. So, the logical question is, why don't we just mine more? This is where the dream of cheap silver goes to die. Economics 101 says if the price goes up, supply goes up. But geology doesn't care about your economics textbook. Most people don't know this. Most silver is not mined. Wait, what? It's true. Over 70% of the world's silver comes as a byproduct of mining copper, lead, and zinc. Miners are digging for copper. They find a little bit of silver by accident. This means you cannot just turn on a silver mine because the price goes up. If the demand for zinc falls, silver production falls with it. The supply is inelastic. It is stuck. And the dedicated silver mines, they are running on fumes. In Mexico, the world's largest producer, yields are collapsing. We have picked all the low-hanging fruit. Now we have to dig deeper, use more energy, and spend more money to get the same ounce of silver. Inflation drives up the cost of diesel, labor, and equipment. The floor price for mining silver is rising every single day. So here is the perfect storm. On one side, an industrial monster that is hungry for record amounts of metal. On the other side, a geological reality that says, no more. This is a classic supply crunch. But if you think supply and demand is the only thing that matters, you are missing the biggest piece of the puzzle. Because the price of silver isn't just about rocks and solar panels. It's about the paper money in your wallet. And the fraud that keeps it valuable. What happens when the world loses faith in the dollar? In Chapter 4, we are going to look at the monetary case. And I warn you, once you see these charts, you will never look at your bank account the same way again. Now, forget the mines, forget the solar panels for a second. Let's talk about the nightmare keeping Jerome Powell awake at night. $35 trillion. That is the U.S. national debt. It is a number so big, the human brain cannot comprehend it. But here is the simple reality. America is broke. For the first time in history, the U.S. government is spending more on interest payments than on its entire military. We are borrowing money just to pay the credit card bill. This is a mathematical death spiral. So, what happens next? History gives us only one answer. From the Roman Empire to Weimar Germany, when a government cannot pay its debts, it has two choices. 1. Default and collapse. Or 2. Print the money. They will print. They always print. This is called debasement. They are diluting the value of your labor to save themselves. And when the printing press runs hot, where does the smart money run? It runs to assets that cannot be printed. Bitcoin? Maybe. Gold? Definitely. But remember, silver is the only monetary asset that is also an industrial necessity. In an inflationary crisis, silver doesn't just rise, it catches up. It acts like a coiled spring released from a trap. If we simply adjust the 1980 high of silver for inflation, the price today should be over $150 per ounce. Right now, you can buy it for a fraction of that. It is the sale of the century. So, if the fundamentals are screaming buy and the economy is screaming crisis, why is the price still so low? Because the price you see on your screen is a lie. Welcome to the COMEX, the casino where the house always wins. For decades, silver investors have suspected that big banks manipulate the price to keep it artificially low. People called them conspiracy theorists. Until they got caught. It's a matter of public record. JP Morgan traders were convicted of spoofing the precious metals market. They paid nearly $1 billion in fines. But how do they do it? It's called paper silver. For every ounce of real, physical silver in the vault, there are hundreds of paper contracts claiming to own it. Imagine a car dealership selling the same car to 500 different people. As long as nobody comes to pick up the keys at the same time, the scam works. The price is determined by the 500 paper contracts, not the one real car. This paper market allows them to dump millions of ounces of fake silver in seconds to smash the price down whenever it starts to rally. But here is the fatal flaw in their game. You can print paper silver. You cannot print physical metal. Remember Chapter 2. The solar industry doesn't want paper contracts. Tesla doesn't want an IOU. They need the physical metal delivered to the factory. The moment the physical demand exceeds the available bars in the vault, the paper scam collapses. It's called a short squeeze, and when it happens to silver, it will make the GameStop squeeze look like a tea party. The dam is cracking, the vaults are draining, and when the water breaks through, the price won't go to $50. The computer algorithms will break. So, what does that look like? Let's run the numbers. In Chapter 6, we represent the three scenarios: the conservative, the aggressive, and the unthinkable. So, what is the number? Where does this rocket ship actually land? Based on historical data and the current deficit, we have three scenarios. Scenario 1, the all-time high breaker, $50. This is the conservative view. We simply go back to where we were in 1980 and 2011. $50 is a psychological wall. The banks have defended this line for 40 years, but once we break $50, there is no resistance. It is blue sky. Technically speaking, a breakout above $50 targets $85 almost immediately. Scenario 2, the inflation-adjusted reality, 135 plus. If we just adjust the 1980 peak for official inflation, silver should be over $135 today. This isn't a bubble. This is just silver retaining its purchasing power while the dollar dies. At $135, silver is simply doing its job. Fair value. Scenario 3, the monetary reset, 500 plus. This is the scenario nobody wants to talk about. If the BRICS nations launch a gold-backed currency, if the U.S. debt spiral forces the Fed to print into hyperinflation, then the price of silver becomes meaningless in dollars. We could see $500, $1,000, or more. But at that point, you won't care about the price. You will care about survival. However, there is a trap. Most silver investors make one fatal mistake. They never sell. Listen to me carefully. You cannot eat silver. You cannot pay your property taxes with silver coins. Yet, the goal is not to die with a basement full of metal. The goal is to maximize your wealth. So, when do you sell? Do not look at the dollar price. Look at the gold-to-silver ratio, GSR. Right now, it takes about 85 ounces of silver to buy 1 ounce of gold. That is historically cheap. In 2011, that ratio dropped to 30. In 1980, it dropped to 15. Here is the strategy. When the ratio drops below 30, You swap your volatile silver for stable gold. Or better yet, you swap it for income-producing assets like real estate or land, which will be distressed during the crisis. That is how you turn a crisis into generational wealth. You don't just hold, you rotate. So, is $500 silver impossible? In a world of $35 trillion debt, AI revolutions, and dying currencies, the only thing that is impossible is the status quo staying the same. The math doesn't lie. The geology doesn't lie. The silver squeeze is not a question of if. It is a question of when. But the window to act is closing. The vaults are draining as we speak. Are you prepared, or will you be left holding paper dollars? If you want to track this breakdown with me, make sure you subscribe and turn on notifications. I will be issuing an alert the moment the $50 resistance breaks. And if you think gold is a better bet than silver, you need to watch this video next. It might save you a fortune. Stack on.